week on Wealth Track, putting your retirement portfolio on autopilot. Financial thought leader Burt Malkiel has teamed up with online investment advisory pioneer Mitch Tuchman to offer retirement portfolios of low-cost index funds that automatically rebalance. Why they believe the combination will lead to smooth retirement landings is next on Consuelo Mack Wealth Track. So Burt Malkiel, here you are. You're an investment icon. And I'm sure that you get approached, many times a day, a week, whatever, to, get your name on a committee and to get involved in a company, because anyone would love to have your reputation behind them. So why did you get involved in Rebalance IRA?
Well, because I wanted to put my name behind something I really believed in. This was something that operates on principles that I've believed in all of my life, and I'm delighted to do that, particularly if it's likely to help individual investors saving for retirement, because if we've got a crisis in this country, the crisis is that so many Americans have inadequately saved and inadequately invested for their retirement and are likely to have a much less good retirement than they should have.
Right.
Charley wrote a book called Winning the Loser's Game, okay? Winning the Loser's Game. The loser's game is playing to win. And investing is about playing not to lose. If you work really hard not to lose money, you end up ahead of 90% of the people.
This week on Wealth Track, the crisis is coming. The crisis is coming. Financial thought leader Charley Ellis is sounding the alarm about the fast-developing retirement crisis with a new book, Falling Short: The Coming Retirement Crisis and What to Do About It. What can we do as a nation, Charley, to solve the retirement crisis?
The most important thing we can do is start talking about it like you're doing this evening. The privilege of being with you, talking about a problem that's not visible yet, except to demographers and people paying attention.
Who really know what's going on.
It can't be avoided unless we do something about it. I mean, that's really important. And the reason for writing this book is sort of Paul Revere's ride. Every Middlesex village and town, the British are coming, the British are coming. We got a problem, let's start dealing with it.
Okay, this is a whole Jack Benny thing. Let's just go right to Mr. Puritz.
Recently, the U.S. Senate held hearings on new rules to make retirement investing safer for all Americans. Managing Director of Rebalance IRA Scott Puritz is a nationally recognized authority on retirement investing and was asked to provide the Senate with expert testimony on the subject.
Mr. Puritz offers his clients asset management and custom investment portfolios for IRAs and offers one-on-one consultation, and he charges some of the lowest fees in the industry.
Over 30% of our clients come to us directly from having, for lack of a better phrase, a suboptimal relationship with a brokerage firm. At our firm, we sometimes refer to these clients as brokerage refugees.
Recently, the U.S. Department of Labor held hearings on new rules that require financial advisors to act in the best interest of their clients and to disclose the real cost of the investments they recommend. Managing Director of Rebalance IRA Scott Puritz is a nationally recognized authority on retirement investing and was invited to provide expert testimony.
The marketplace is not working. It just categorically is not working. There is not true awareness of the multi-layer fees. We surveyed our clients that come over from brokerage relationships, and 83% of them had no idea the second level of fees.
Also invited was Ron Krasuski, CEO of Stifel Financial, a 125-year-old brokerage house that opposes the new rule. Puritz and Krasuski squared off.
And to the extent that the market supports a business model like yours, I'm all for you.
But how about a regulatory level playing field? What's wrong with that?
We have one.
No, we don't. That's just absurd.
Well, what is this regulation, if it succeeds? What would it mean for brokers who are giving advice in regard to individual retirement accounts?
Right now, the brokers are usually on a commission-based system, and they operate under something called a suitability standard, which means that they can sell you, as the investor, products, any kind of funds, as long as they're suitable for you. But there's a different type of money manager, like my firm, Rebalance IRA, where we operate under a fiduciary standard, and it's a higher standard where you can sue me if I don't show that I am operating under your best interest. And so the brokers are having a fit because they have to move from this standard to this standard, and they're worried that's going to become very expensive.
Hardworking Americans like the Florida firefighters and teachers who devoted their careers to protecting the public shouldn't have to worry about whether their financial advisors are planning to get rich by playing roulette with their customers' retirement savings. Hardworking advisors like Mr. Puritz shouldn't have to compete with these schemes. I am glad the Department of Labor is working to fix this problem. Thank you, Mr. Chairman.
The reaction that most people have to that idea of just buying the index or buying an index fund, which replicates the index, the negative reaction is, well, you can't beat the index then, so you're always going to underperform. Well, the answer is you're not always going to underperform. You're going to always, if it's a well-managed index fund, you're going to earn the index. And yet, you're not going to outperform. But guess what? You're also not going to underperform. And it turns out that that's where the real problem is. It's like a lot of games that you play. You don't always win the game by beating the other team at what they're doing. What you do is you end up losing the game by losing.
You know, if you are going to be having somebody manage your money, you want to make sure that you've made the right decision, that you're going to be first of all, paid attention to, right? That they're going to hear you out. They're going to put you in the right investments based on where you are in your life, and that they are going to be charging you the least amount of fees. You know, fees are very important, and they can erode your returns. So if you want to try somebody out, you might not want to give them everything. You don't want to jump in with both feet. But why not give them some of your assets to manage and evaluate then how they're managing it compared to maybe how your other money is being managed. And then after a while, maybe evaluate and see if you should make some changes.
There is an initiative right now with the Department of Labor to make retirement investing safer for all Americans and really eliminate these conflicts of interest, which lead to the hidden fees and the obfuscation. But what consumers can do is migrate to low-cost index funds. Rebalance IRA is a national registered investment advisor that is dedicated to providing consumers at all income levels with superior, low-cost, high-quality, endowment-style retirement portfolios for long-term growth. Rebalance IRA charges 0.5% for retirement investment advice for our clients.
That's half the cost of a traditional investment advisor. Rebalance builds investment portfolios of index funds and ETFs that add just 0.2% to the fee.
So our clients experience all-in, everything type cost of 0.7% per year.
Almost everybody is surprised by how much benefit you get by working 8 more years, and how valuable it would be for every individual to be able to sit down and know the numbers and then make their own choice for themselves and their family. I'm all for free choice, but I don't think anybody is making a free choice when they haven't got the information they need to make a good free choice.
This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Our next guest says this traditional asset allocation may no longer work and could be putting your retirement nest egg at risk. He is Scott Puritz, Managing Director with Rebalance IRA. Scott, welcome. Nice to have you here. So what has changed? Why does the 60-40 formula, which so many people have relied on for so long, no longer apply?
Well, there are really 2 major reasons why this classic rule no longer applies. First, interest rates are at historic lows, with U.S. Treasuries trading around 2.2%. That is at historic low and 97% lower than any time in American history other than after World War II. Mm-hmm. And second, Americans are living dramatically longer. So the combination means that the old rules are not only out of sorts, but downright dangerous.
Yeah, Becky, I'm here with famous author Burt Malkiel, author of A Random Walk Down Wall Street, published in 1973, and in January, the 10th edition came out.
That is correct.
Thank you for joining us, Burt. And I'm going to go right after you here.
Another Blue Chip Book Award. It goes to A Random Walk Down Wall Street by Burt and Malkiel. The book has long been established as a must-read when you're first starting a portfolio. It is one of the great classics on investing, and Burt and Malkiel joins us now. It's great to see you this morning.
Thank you.
This was one of those books that explained to people that maybe stock picking was not such a brilliant idea.
I think the way that I put it in the first edition was that a blindfolded chimpanzee throwing darts at the stock pages, of course they don't have the stock pages in the papers anymore, but at that point they did, that chimpanzee could pick a portfolio that would do as well as the expert.